take a look here, I've got the CFTC combined asset table, and you might be wondering, how do I use this percentile rank score? Well, it's very helpful, this percentile rank score with this table that Arno's put together for us with a number of different presentations of the information. But the key thing to realize is this percentile rank lets you know what the relative positioning is in the COT report relative to the last 52 weeks. So it's easier to explain it than to state it. So if you just look here at aluminium, in the aluminium contract, you can see that the percentile rank score is 77.50%. So what that means is over the last 52 weeks, the specific futures contract is higher than it has been 77.50% of the time. So it's quite heavily bought. And if you look at this contract here, you can see natural gas, look, it's 96.15%. So that means that the specific futures contract is higher than it has been 96.15% of the time over the historical period. So you can see it's very stretched to the upside, right? Now, if you look, for instance, at the Australian dollar, what you can see here is that it's got a percentile rank of 1.92%, but you can see that the positioning is to the short side. So this is an extreme short positioning, okay? And it shows you that the instrument is very, very heavily oversold. Now, that gives you various options now. Because if there's suddenly a reason to buy the Australian dollar, you can expect those stretch shorts to unwind, and you could expect a snap reaction higher in the Aussie dollar. Similarly, with natural gas, if there's suddenly a reason to sell nat gas, then all those long positions are likely to unwind. So by looking at these percentile ranks, you can see at a glance how stretched positions are. So if we just take a look at the FX charts here, if you look here with all these different currencies, you can see whether the position is stretched to the upside or the downside. So here, the Aussie dollar, you can see, look, it's well below the 20th percentile. So the Australian dollar over the last 52 weeks is heavily sold to the downside. Okay. And you can find these stretched positionings just by looking at the 80th and the 20th percentile, and you can see where the market is relative to previous positioning. You can see this is a very handy little chart here. You can just see them all ranked in a histogram that's very easy to see. And you can see here, look how stretched or otherwise the various FX currencies are. So using these charts, there's a tremendous amount of opportunity to look at very stretched positioning. And what you're really looking for is extremes. And we're looking for reasons for instruments to come off their extremes, right? That's why, we weren't interested in buying a dollar recently, because the dollar was very stretched to the upside in both the aggregate and the index level. So that means dollar longs. It doesn't mean they can't carry on, but there reaches a point where market's saturated. No one's left to buy. So just don't forget, you want to use these CFTC percentiles to recognize stretch long and stretch short instruments. It can be very, very helpful.